We're looking at the front-facing headline news. Retail sales are great. The stock market's great. This is giving everybody the false illusion that America is doing fantastic financially. People are broke.
We now have two classes of people. We have people who own assets, and we have people that are taking on increasing levels of debt. Those are the two groups. One has negative net worth, and the other has massive and growing net worth. We're moving closer to a breaking point.
What's your overall opinion of the DFW housing market?
This is actually the weakest that it's been in at least a decade. We have really high inventory for the start of the year.
Do you think that we're on the cusp of a housing crisis?
You're going to see things moving faster than they have in the past. Volatility, prices. It's very hard to put a solid prediction on this year, like I'm going to be super bearish and say we're having a recession, or I'm going to be super bullish and I think asset prices are going to reach all-time highs. It can go either way, and it's going to go either way up until the point that things collapse.
Amy, welcome back to our show.
Happy to be here from home this time.
Yeah, it was kind of fun. Last time we were face to face, and now we're both in a cold snap. So here I am sitting in Maryland. You're in Texas, and it's cold. So, well, you're a housing and economic analyst, and you're based in Dallas-Fort Worth, and you frequently contribute to Fox News. I know we were just talking about that a second ago, but anything else we should know about you?
No, that's pretty much it. Yeah, we're here in Dallas and it is like 25 degrees. So it's definitely been an unusual January, but housing market is pretty frozen too.
Yeah, well, I know we've gone back and forth, and texted each other and trying to get you back on the show. And I know you had mentioned that the market wasn't getting any better since we left there, last fall. So, kind of give us, so everyone knows, what is your geographical footprint? Like, what areas of housing are you studying? Is it nationwide? Is it just the DFW area? What do you cover?
So I cover everything loosely, but my focus is Texas, and more specifically DFW area. Just that's my niche. That's my area of expertise. But I constantly keep up with and follow everything that's going on nationwide as well. So I'm got a good general awareness of just the overall housing market, which is admittedly very different region to region. And it's not all what's happening in Texas and Florida is happening everywhere else. And it's still early to tell if that's because, Texas and Florida are kind of the lead on that, or if this particular housing cycle is just going to play out more regionally, like what we saw in the early 1980s. It could go either way with that.
What's your overall opinion of the DFW market, housing market?
It's pretty weak. This is actually the weakest that it's been in at least a decade. It's January right now. We have really high inventory for the start of the year. And a lot of that has to do with just carryover. There's houses that have been on the market since last spring of 24 that have not sold. And so you've got those houses, you've got everything that listed in the fall before the mortgage rates went the opposite direction that people thought they were going to go. And all of that inventory carryover has landed us with a January that's got a lot of sitting inventory. And I've actually noticed, Todd, in the last couple of weeks, whilst buyers have been sidelined by Snowmageddon, the cold temps, everything else, the high mortgage rates, sellers are coming off the sidelines and they're listing homes, which is typical of a seasonal, January is when people sort of are like, new year, time to sell my house. But this is a pretty solid start to a new year of listings. And again, those are coming in on top of a lot of existing inventory. So I think this spring, we are going to see pretty high inventory in this region.
Do you think that we're on the cusp of a housing crisis? I mean, I know we had an affordability crisis that we've been sitting in, but do you think that this is going to, with the new inventory that's coming on and the old inventory that's still sitting there, I mean, do you think this is going to be a major buyer opportunity?
I do. This year, I think, is actually going to be the best opportunity for buyers that we've had in the last 5 years. Now, that's not saying much because the last 5 years have been insane, whether it was, crazy bidding wars and going 20% over list on the front end of that. And then on the back end of that, it was record high, relatively speaking, for the last 20 years, mortgage rates and record high prices. So it's been a rough market for 5 years. But what I do see this year is opportunity for buyers who are capitalized to come in and say you find a listing that's been on the market for 9 months, just sitting there. You can be the agent of price discovery. Go in, put in a lowball offer, see what happens. See what happens. It's not been this level of buyer's market in at least a decade. So you might be able to find something and put in a bid and meet a seller that needs to sell for whatever reason and get a deal. But in terms of housing crisis, the ongoing crisis is still affordability. It's still, mortgage rates going higher rather than lower was the opposite of what people anticipated. And so now we're sitting here and everybody's wondering, well, does this mean prices are going to come lower? Because all of 2024, in my opinion, all of the bullishness around housing or the reason why prices kept going up in most of the country was predicated on the premise that the Fed was going to cut rates, which they did, and mortgage rates were going to come lower, which they did not. So in a lot of ways, everything that happened last year shouldn't have happened based on our current reality. And you see that immediately with the builder stocks. If you look at the home builder stocks, big run up through about July, August of 24, big collapse starting in the fall, coming down to now where they've erased, I think, 30% from the highs, pretty substantial. That's because they were being priced on the idea that mortgage rates were going to come back down, and it didn't happen. Typically, stock market is a leading indicator for regular on-the-ground markets. So if you look at what happened to home builders, that says to me home prices are correcting next if mortgage rates do not materially come down. And Todd, right now, I don't see mortgage rates materially coming down.
Yeah, and for the builders, just to kind of support what you're saying, they were hoping that the rates would come down because they were doing rate buy downs by another company that these builders own, which is their mortgage company. And they were buying down the rates from 7% to 5%. And we're even seeing some lower than that right now. And a lot of people don't realize it costs like $40,000, $50,000, $60,000 to buy down these mortgage rates for the fixed term, over the 30-year. A lot of them are doing like a 3-2-1 buy down where your, payment is going to adjust and go up over time. But a lot of the builders were buying down the 30-year fixed rate mortgage in order to sell the house, and it's costing them. So, yeah, I mean, they were anticipating that with this change in monetary policy dropping, the Fed dropping the Fed rate, that mortgage rates would kind of mirror that too. But you're exactly right. It's going the exact opposite. You're in an area where, I mean, I know when we were there, our team last fall, after we podcasted with you, we drove around, and I want to talk about, in a little while, I want to talk about the tiny home communities that we saw coming out of the ground, which was disturbing in some ways, but you have a lot of big communities. I mean, thousands of homes, new homes that are being built. And I want to talk about Trump. Obviously, we're under a new regime. And I do want to bring up and kind of get your opinion on this, because being in an area where you have so much new home inventory, Trump has ordered delivering emergency price relief for American families and defeating the cost of living crisis, sort of like a executive order, emergency action. his report that came out actually on the day that he was inaugurated is pretty vague. I understand that there's a lot that goes into, how do you drop costs for Americans? But focusing in on the housing market, it says many Americans are unable to purchase homes due to historically high prices, in part due to regulatory requirements that alone account for 25% of the cost of constructing a new home, according to recent analysis. And so he goes on to say that I hereby order the heads of all executive departments and agencies to deliver emergency price relief consistent with applicable law to the American people and increase the prosperity of the American worker. This shall include pursuing appropriate actions to lower the cost of housing and expand housing supply. Now, my question to you, this all, and look, I've built houses. I've worked for builders for many, many, many years. I started as a contractor in 1989, serving the housing market, and worked for big, tract builders, and through the years. I always have said the regulations are getting worse. It's adding. We now, the numbers are coming out, 25% of the cost of a new home, which almost 25%, 24 and some change, we'll look at it, is added to the house. So keeping it simple, if you're talking about a $400,000 house, almost $100,000, it goes into the costs that are soft cost, engineering, architectural, lawyer, legal expenses for builders and developers to even get to the point to where they can apply for building permits for a community. The infrastructure costs, the regulation costs are exorbitant. The impact fees, now that we have the president saying, look, we're going to come in and we're going to cut these, they're going to attempt to cut these impact costs to the builders, encourage them to build more affordable housing. What is happening to the over 1.4 million new homes that are either under construction right now that already have those costs factored in? They're not getting the savings, or these homes that have been permitted to be built. What are the builders going to do?
Yeah, it's going to be tough. I mean, I think the thing about the Trump memorandum is it's really wordy. It's long. There's a lot of ideas and ideal situations in there that I don't know how much of that's actually going to come to fruition, what specifically it's going to look like. I was encouraged to see that there were no direct stimulus to increase demand for buyers in what he wrote in that it was a very long memo, and he did not touch at all on, I'm going to give out $20,000 down payments to people, or sort of the things that the Harris administration was promoting. I think Trump is obviously he's a real estate guy. This is how he made his money for years before ever he went into politics or any of that. And as a real estate guy, he is coming at it from the approach of supply, which is we've got to build more housing and make it cheaper to build housing. And I am on board with that. But like you said, there are gluts of supply in some of these regions already, like the Texas and the Florida, and some of these homes, like you said, were slapped up rapidly during this COVID pandemic. They had really expensive costs to make because they had expensive labor, they had expensive materials that were out of stock everywhere. And I think builders are going to take a hit on a lot of the sitting inventory if these Trump regulations come to fruition and produce a boom in building, because the boom in building that comes from anything Trump does is going to be more affordable building for builders. Now, will that translate to prices for Americans? Not necessarily. It might translate to margins for builders and higher share prices. We can't really know that out of the gate, but it would be good on aggregate for the country to have more housing supply built. The regions right now that have really high supply, and a lot of it is weird supply, like you were talking about the tiny homes and some of the stuff that is, frankly, Todd, like it's in very rural areas with no infrastructure that people don't necessarily want to live in. And you've got that coupled with now Trump is starting to, at least federally, calling people back into work. So how much of that is going to roll over into the private market where we're calling people back into work there? These houses that are in these super rural areas that were kind of slapped up during the pandemic, builder quality questionable. You want to get like 2 inspections before you buy one. Those are going to be a tough sell in the Trump economy. Those are going to be a tough sell. And I don't know if you noticed, there's always those San Antonio tiny homes going viral. I'm sure you've seen them, like the little, like double wide trailer box stacked on top. Those have price cuts now in San Antonio. And they started out, quote, affordable. I mean, they started out in like the 150s, and some of them are now down. They've cut them down to like 120. Again, if it becomes cheap and easy to build, especially build cheap stuff like that, then it's going to be a race to the bottom for pricing on those until builders can unload what they have. And that's really going to impact regions that have built a lot of supply in the last 4 years.
It's going to hurt the people that have bought the houses prior to them slashing their prices too. I mean, if you look at a subdivision that has 1,000 lots and they've sold 300 of them already, they sold those at a premium. And so now them dropping the prices, crushing those buyers.
It is hot. And that's something that we saw during the great financial crisis to a huge extreme, because people were actually being foreclosed on because they were underwater when that happened. In this current situation, I think we had relatively higher level of stability for buyers to a point where, maybe the ones that are underwater are going to be able to hold on to the property. Whether or not they want to is another story. But financially, they're going to be able to stay in their homes more likely than not. Not everybody, but
the problem is, like you said, they throw their keys away. I mean, people were literally saying, I'm going to buy the house next door for $100,000 less. Why am I going to keep paying this mortgage?
Yeah, and that is happening. And we already see that. Really, honestly, I see that in the DFW area. People who bought in 2022 are selling at a loss from what they paid in 2022. And those are the people who have to move for whatever reason. They got called back to work. They got divorced. They had a death in the family. They're sitting there and they're looking at this and they're kind of like, wait a second, you told us this was like the most amazing housing market ever for sellers and where home prices are at record highs, but not for me, because I bought at the top in 2022. And, the region that I live in, then builders went and built another 100 homes in my subdivision, and those builders can't move them. So they're discounting them. And yeah, I think you're going to see two things that come out of that. The first thing being like what you said, some people might just walk away and be like, I'm done. This isn't worth it. And a second thing that you might see is hesitation from buyers on the sidelines who are watching this and thinking, if I buy this house for $650,000, when that guy bought it for $700 and now he's under, is the next guy going to buy it for $575? And I'm going to be the sucker. And then when that happens, you sort of have that psychological effect on buyers where they pull back and they're just like, I'm going to wait till this neighborhood's built out and see what these builders are selling at then, kind of mentality.
Yeah, you're right. And it's when the market is going up, and I've explained this numerous times on my show and as well as, talking with buyers and sellers. But what happens when a market is going up and price increases are happening quite rapidly, what you're trying to do is buy it today at a higher price, but less than what it may be 2 months from now, right? So when it's going up, so if a house is priced at $400,000 today, and we're in a market that's going up to where next month it could be $475,000, we're going to offer $425,000 on that house to get it, because we're giving more money today. But we know that in another month or so, with the trend going up, it's going to be even higher then because of the exuberance and the competition and things like that, the demand. But when it's going the opposite way, it's completely different because no one knows where the bottom is. So if that $400,000 house is trending down, and in a month it may be 375, or in 3 months it may be 350, you want to try and guess that somehow, that you don't get hurt by overpaying, and you want to offer them a lower price, and you're going, but is that low enough? Is it going lower? Just like you're explaining. And I just want to pull up this Fred chart here because we're talking about housing inventory, and this is new privately owned housing units under construction. These numbers here on the left are in thousands. So when we look at this, at the end of the year, 2024, December, there are 1.4 million about homes that were under construction. That's a lot of inventory. When we're looking at over the last couple of years, nationwide, we're selling 4 million about units, total units of existing, and, because inventory's been down. So looking at something where you're looking at about 35 or 40% of last year's complete home sales, total home sales, are now wrapped up in unfinished construction, homes unfinished. That number, you're saying we need more housing, but we don't necessarily need more of the housing that they're building. They're building a lot of condos, which are expensive, and we're watching insurance and condo fees take people out, and taxes, where that's not affordable for them anymore. We're looking at these houses that the builders have been building because of the impact fees being so expensive. They have to build McMansions in order to make a profit in the community. So we're dealing with houses that are just too big, honestly, for what people need or can afford. So what do you think? How do you think a Trump plan or administration will modify the types of houses being built?
I don't know that it will. I am hopeful. I mean, that's obviously what people want. But the general trend, kind of regardless of who's been president over the last probably 20 years, has been sort of for builders to just build what they think is going to be the highest profit margin for themselves. So that's why we've seen this sort of rush to build, quote, luxury, tiny home, tiny lot, condensed communities. I think they've been able to sort of get away with it to a certain extent in the last couple of years because existing homes weren't coming onto the market. And so buyers didn't have a lot of options. But my concern, Todd, is that as existing inventory is returning to market, which it is, if you look at all the data, it is slowly climbing back up in Texas and Florida and Nashville and places like that. It's actually above pre-pandemic levels. Those are the homes that people really want. They are built in the most desirable areas because those areas are now built out and completely sold out. When builders have to compete with that set of sellers again, they're going to have to pivot and start thinking about what they're actually offering as a product. And it's not going to be, what's the cheapest I can build? What's the highest profit margin thing I can make? That model might not work as well in an economy where existing homes are sort of coming back into the picture. And with mortgage rates being high, it is tricky again because that is sort of bringing us back to this supply lock-in effect that we've had with all these people that have those desirable homes have 3% mortgage rates. And it's too early really to know whether or not Trump's going to ultimately deliver significantly lower mortgage rates. But I do think that builders had a very kind of once in a century situation over the last 2 years in terms of just a chokehold on market share. They were able to build what they wanted and name their price, get their in-house lenders, completely kind of corner not just the builder market, but the mortgage market in a lot of ways because they could buy down. That era is over for builders. that is over. I think they had this great once in a lifetime, window of time, and we saw this. This is exactly how their stocks interpreted it. But I think we're going to go back to a more normal housing market starting, with this Trump era, and it's going to take time. And I'm not saying it's going to be normal this year, because it's not. I actually think it's going to be worse this year than it's been in a lot of recent years, because we um, have seen, I think, if you look at all the analysts, the average price forecast for this year is pretty low. It's lower than it's been over the last 5. We've got some of them, even I think Moody's was saying negative price forecast for 2025 nationwide. So I think this is going to be a challenging year for housing, and home prices are finally going to start to feel the pain of all of the rate hikes that have sort of been building over the last couple of years.
Well, you talk about Trump lowering the mortgage rates. That's one of the reasons why we got in this mess in the first place. We should have never had 2.74% 30-year fixed rate mortgages. Number one, let's think about the ones that benefited from this. Certainly if you were a home seller and you could find a place to move, you benefited from massive upside of profit because mortgage rates are so low. But it's kind of like you then turned around and bought at a higher rate. Now, you may have gotten something more that you want versus something that you didn't want. Or if you were lucky to refinance, you didn't get the 2.75 in a refinance. Refinancing is always more expensive than buying a new, a purchase. But you maybe got your house fixed or renovated, and the things that you wanted to do, you cashed out. Do you think it would be catastrophic to see another 2-point-something% fixed rate mortgage rate?
In the immediate term, no. But in the long term, absolutely. And I think this is sort of the entire problem with the zero interest rate policy regime that we had over the last 20 years. It works really well until it runs out of options. And we sort of ran into it's run out of options when we had inflation running, 7 or 8% in 2021. But up to that point, Todd, and I think this is a really important thing to remind people of, because people tend to overlook this or get upset by the fact that there's been record investment from, institutional buying and flippers and all of those things that happen when money gets cheap and credit gets cheaper. The 2 periods in U.S. history where individual household, regular family, owner-occupied home ownership was the highest were 2004, 2005, and 2020. So when you first drop those rates to new lows, regular families buy homes. They do. They get homes and they get in. But so then come all the investors and all of the flippers and all of the, frankly, fraud and get rich quick schemes and problems. So it is one of those things that's very tempting to do as a quick fix, but long term is not sustainable. And my concern with the Trump administration is that Trump is a pumper. He's a real estate guy, and he likes to have things look good when he's in charge. So he was very adamant about Powell cutting rates back in 2018. He pushed back when Powell was trying to hike. Again, he's not the Federal Reserve. He can't, and I'm not sure what's going to happen in terms of executive orders or this kind of, so far, this is kind of like an anything goes for the last 2 days, but he shouldn't be able to just mandate lower mortgage rates on his own. So outside of that, I don't think the Federal Reserve and the bond market are going to give us lower rates in the current economic backdrop that we have. That being said, I do see a path to potential lower rates that is a very yucky path, where it's just kind of like an economic collapse and we are forced back into like emergency measures.
Yeah, well, like in '07, it didn't work. They dropped the rates so low, and that didn't save the housing market, and collapsed banking. Talking about the bond market and the investor side of things, the secondary mortgage market, and the ability to sell a mortgage at a, let's just say, 4% or there, I'd say anything really south of 5.5% as far as a 30-year fixed rate mortgage. I think the only way that could be achievable today is the only way it was achievable before, and that's for the government or the Federal Reserve to start investing in mortgage-backed securities. So I think that's the only way that it should have never happened in the first place. That's quantitative easing. But they entered that space, and they were the only ones that could suppress the 30-year fixed rate mortgage and get it down to, for the last 10 or 15 years prior to the hikes, or somewhere around 4% or less. So anywhere that I've seen, whether you say, the Federal Reserve's not the government, which, okay, is fine. They're tied very closely together, right? And the thing is, anytime the government has ever showed up, it seems, at least to me in my lifetime, and says, we're here to help, it gets worse. They end up destroying it. And the problem is because there's a big disconnect, in my opinion, on the politicians and the actual boots on the ground, right? There's a huge disconnect. They're not living in the same world as most of America. And I think that that's a big problem. Talking about new home construction, I think these builders are in deep trouble. I think we're going to see where some of these builders, I don't know if they're going to make it. We're seeing already things that are happening that remind me of the great financial crisis. And that was when they start selling scattered lots in their community to other builders, allowing them to come in. They're actually doing build to rents. So investors are coming in. Now some builders are expanding that, where they might say, hey, we'll only sell one a month in the community to an investor. Where they're opening that up and bundling lots to investors to because they see. And a lot of people don't realize that builders have to sell homes. They have to. It's not like someone that's sitting in an existing home and they're like, yeah, we'd like to move, but we don't have to, and we don't have to put our house on the market. We'll keep paying our mortgage payment if we have one, and our taxes and our insurance. But a builder's losing money every single day. The carrying cost of, contributing to the HOA if they're partially turned over, built out and turned over. So they have to contribute to the HOA, keep that funded. They have to pay the taxes and the carrying cost and the debt load. This article on Realtor.com, it says, while the administration, and this is a brand new article too, January 21st, while the administrative orders offers few specifics, it does highlight the housing crisis at a time when home affordability is at a 40-year low, and nearly half of the renter households are cost burdened, spending more than 30%. And that was the number. A third of your paycheck, you wouldn't qualify for more than that. Now we're seeing renters 50% or more of their paycheck is going to rents. And also, talking about his memo, reference a recent analysis of regulatory costs involved in home building appears to refer to a study conducted by the National Association of Home Builders 2021. They're known as the NAHB. Survey of developers and builders found that regulation imposed during development accounted for 10.4% of the price of the home built for sale, while regulations on the construction phase accounted for 13.2% of the price. the governments are getting rich too on these new homes, these new communities. So that becomes a double-edged sword because they're spending this money. They like to have this income, right? They want these builders to continue to be able to pay 24% of an average home price in government fees or regulatory fees. Now, the government doesn't get all of it, but the architects and the engineers and the lawyers, the whole system is getting very wealthy and has benefited from this. So I think, to your point, where's going to be the incentive of cutting these costs?
Yeah, I don't know. First, I feel like every politician has promised lower regulatory fees, less regulation for building, and I've yet to see one deliver on it. um, I would love for it to be Trump. Like I said, he does have a real estate background. He was, I believe he wants to see improvement in the real estate market, but I also believe he's a guy that loves high asset prices. And so those are kind of going to be conflicting goals and objectives that he has. And then you've got the builders who, quite frankly, have gotten accustomed to getting what they want. And I don't know that they're going to just sort of take what's given to them and, just accept lower profit margins and just go forward with, oh, well, this is the way things are now. I'm wondering where else they're going to start trying to cut corners or sort of bypass around whatever the government's doing. Because they did this in 2022, 2023. The government, it's the Federal Reserve, but the government gave high rates, high mortgage rates, and they said, we don't want to play by those rules. We're going to buy down the rates with our own in-house people. And like you just brought up too, another thing that they're doing is they're saying, no, we don't have buyers. So, and this is actually happening in DFW right now, Todd. They're coming to investors and they're saying, we'll sell you 3 houses if you pay cash for this price. And it's like off the books. So it's not affecting the price of the average house in the community. But individual home buyers need to be aware that that is happening right now in some of these Dallas communities. Investors are buying 3 or 4 lots at a time for a discounted cash price. And you don't know what they're paying per house. But you're going in and you're paying whatever the builder price is giving you and taking that out with a high mortgage rate. So builders are going to keep getting creative, I think, with ways that they can continue to charge high prices and continue to move inventory. And it'll be interesting to see how the Trump regulations play out, because I just don't know. Let's put it this way. The last time Trump was in office, real estate prices only went up. They only went up. Mortgage rates went down and real estate prices went up. Now, it doesn't necessarily mean that this is going to be an exact repeat of the prior scenario, but that's what we saw in from 2016 to 2020 with Trump and his administration. So,
but it was supersized in 2020.
It was supersized.
It was supersized. We didn't see anywhere. I think everybody would be happy with the 3 to 5% real estate growth year over year than they would 24 and 25% real estate growth from 2020 to 2022. I mean, that was crazy. When we saw prices in some communities double, markets around the country double. I mean, junk houses doubling in price. $500,000 didn't get you squat. It was almost the trailer home, right? And that was crazy. And we did that by a couple different things, right? It was the stimulus, the unbelievable, the American Rescue Act that gave beyond any stimulus and forbearance and mortgage remodifications and a whole host of things that happened then. Then they gave states like $50,000 per household after, above, and all that to help people that were still struggling with the pandemic related whatever years later, and preventing landlords from getting paid. So, I mean, it's been a real mess, really. I mean, I don't have a problem with prices of houses adjusting for inflation. I know America has a system that has no reverse gear. If we do, we crash, like recession. If prices go down, we can't have deflation, only in cell phones and TVs. But when we're looking at houses going through deflationary period, these asset prices are meant to continue to climb. And when we get a negative, actual price decline, it breaks the system. People that bought the houses across the street for $100,000 more are upset. They don't want to continue paying their mortgage. The banks are having trouble with the 30-year mortgages that they wrote at 2.74%. They'd rather the house go in foreclosure to end the pain with that, because now they're paying dear. The banks are paying for it. But let's look at what you're saying here, because investors for years have been about 34% of the buyers of single family houses, competing with the home buyers that are going to live there. But let's look at this realtor.com link here, specifically Dallas, Texas. Now, you could tell us what some of the best neighborhoods are, but we won't go into that. But what I want to point out here is homes for sale in Dallas, Texas, 3381. Look at this homes for rent, 15,274 houses available for rent in Dallas.
Yeah. I mean, part of the great, process of 2020 to 2024 was a huge shift in, home owning versus renting, and investors were all over 2020 and 2021, buying all throughout the Dallas region. They got ahead of the inflation. They saw what was coming and they acted on it. And as a result, now we have the situation where we have a higher income pool of renters than we've ever had before, because these are people that would be home buyers in a normal market, but they're either priced out or unwilling to participate in the current market. And we have seen that. We actually had negative rent growth in a lot of submarkets in Dallas last year. The rental market can only take so much of a load of supply, even though we do have a higher supply of tenants, simply because more people are priced out of buying. There's only going to be so much supply and demand. And with the deportations potentially coming, that's going to be another factor that might put downward pressure on rent prices into this next year.
As far as the rental rates coming down, I mean, that looks like there needs to be. I mean, how many years would it take to absorb 15,000 homes for rent currently? I mean, it seems to me like, looking at these numbers, I mean, they're not renting.
They're not, but they aren't necessarily needing to sell either. That's sort of the conundrum of a market that we've created, is that people are just sort of holding onto homes like Pokemon cards. These are assets. These are beanie babies. They go up in value. And so there's a lot of landlords right now sitting on cash flow negative properties, and they've been sitting on them for a while, and they're willing, some of them, to sit on them for longer, or they're financially able to sit on them for longer, because they're hoping that something turns around with the market, and specifically with Trump. And I have to be completely honest with how I look at the potential for the next year with the Trump administration. Trump is an agent of chaos. He always has been. And I don't expect him to be different this time around. What that means, and we've already seen that with 2 days in, we've got these Trump meme coins. You're going to see extremes under his presidency. And you're going to see things moving faster than they have in the past. So that means volatility, prices, things in markets, and it can go either way, and it's going to go either way until it flips. So it's very hard to put a solid prediction on this year. Like, I'm going to be super bearish and say we're having a recession, or I'm going to be super bullish and I think asset prices are going to reach all-time highs, because there's a high likelihood that we could actually see both of those things up into the point that things collapse under this agent of chaos, which having him in office increases the odds tenfold. You will see extreme growth in a lot of areas because he always pushes the envelope on everything. He pumps things. He moves fast and breaks things. He takes action. He wants things to go up. He wants to build. He wants to improve. He gets results, usually early on, that look like a boom. But he also really increases that risk of getting that bust. And when that bust comes under someone like him, it's dramatic, like we saw in 2020. He was still president. And yes, there was a global pandemic, but the things underneath the surface were already building, Todd, before that pandemic hit. There were problems in the bond market in 2019. There were problems with this zero interest rate policy that were already starting to bubble to the surface. And the pandemic just sort of was the tipping point that ushered it all in. But with a president like Trump, we are always on the edge of being vulnerable to one of those external tipping points.
Not to mention the fact that coming in, he's inheriting a big bag of
a mess.
You know what? We have 42.7 million student loan borrowers that have federal loan debt right now. They didn't pay for years.
Nope.
They now have to pay as of the end of last year. They now have to repay again their student loan debt. This was not used to qualify home buyers for years. They almost forgot they had that debt. Biden was promising that they were going to wipe their debt out. That didn't happen for most of the student borrowers. We have the average car payment is over $700 a month. We saw car prices go where they were selling way above list price, and you could sell your used car for the same price you bought it after you drove it for 3 years and put 50,000 miles on it. They're now financing those cars for 7 years, their new car purchases. We've seen more credit card debt than we've ever seen in the history of our country. Now the average credit card finance charge is whacking people at an average of 25%, which means that for many, bankruptcy will be the only option because they'll never pay off their credit cards. So, but it doesn't go away today. It's not, we're still dealing with this carryover of the last 4 years of kicking this can down the road because nobody wanted to see anything crash. They redefined what a recession was and said that we didn't have one. So when you look at, we're looking at the front-facing headline news where retail sales are great, the stock market's great. By the way, only 10% of the population is taking advantage of that at best. So we've got runaway stock prices. This is giving everybody the false illusion that America is doing fantastic financially. We're so overvalued, right? So when we look at it, I'm just wondering when this will all fall apart.
Like I said, we're moving closer to a breaking point for the current system. And you are absolutely correct that Trump inherited a lot of problems. These were things that were kicked the can through November to get through that election. And I don't know that there's going to be a quick fix for this. Honestly, this has sort of been since Ronald Reagan, we've had what I consider to be a transfer of wealth economy. And in recent years, it has accelerated in frightening ways to a point where we now have two classes of people. We have people who own assets, and we have people that are taking on increasing levels of debt. And those are the two groups One has negative net worth and the other has massive and growing net worth. And the people that are in that other group, gosh, it's kind of like, it feels like Squid Game 2 was released at a opportune time, because these people are growing increasingly desperate. So like you said, they're doing things like racking up credit card debt with a 25% interest rate, taking out a $1,500 a month car payment for a truck. Their zero date options, record high levels of people using zero DTE options. This is just the meme coins. Again, I think that's the perfect example of how much this transfer of wealth is accelerating. Because when people do things like that, it's a transfer of wealth that happens literally in like 3 days. They throw all their money into this sort of gambling system, and who's ever running it, whoever already has all the money, gets more.
Look what happened to the stimulus. I think
Yep.
I think dollars are the only thing that defies gravity, because it goes all the way up to the top, right? I mean, you print all this money, you print more money in 2 years than you do in 200 years, and you would think that we as Americans would be in the just the epitome of success and wealth. We had more opportunities. We didn't have to pay our student loan debt. We could have taken that money. Well, you could have paid it off with no interest if you'd continue to pay your payments. But hey, when you're told you're not going to have to pay that, we're going to wipe it out for you. Well, you'd be a jackass if you did, right? If you actually paid it off, they'd be like, well, why did I do that? My friend just got his wiped out. So we're setting this up. We print all this money, and where does it go? People are broke. Where does it go? They sat home on unemployment, made $700 extra a week, in many cases more than their employer paid them, right, to sit. It makes no sense. And now they're all broke, which brings us to the next spot here, Amy, because I want to talk about tiny homes. Now, you and I have spoke about this before. I am not a fan of tiny homes. Now, I'll say this. I'm not trying to insult the ones that live in tiny homes. Somebody wrote me like a 7-page letter, hand wrote, when I did this podcast on tiny homes being backyard sheds, essentially, and wrote me this 7-page letter about how I was wrong and insensitive and things like that. And I get it. I'm not trying to be insensitive. There are people that live in RVs, and if that's the way you want to live, I am 100% supportive of that. There's a lot of having a tiny home on wheels, an RV. All right. So you can travel the countryside. You can park it in Walmart if you want. I mean, whatever. Right. My problem is that for $75,000, $100,000, I mean, this is crazy. What you could have bought a house for back in 2008. I bought many houses in 2008 for $50,000, $60,000, $75,000. Right. So what was, and safe housing? Yeah, it was outdated. It was distressed, but it was a house with a plot of land, running water, running sewer. You didn't have to hook up to something or compost your poop. And here, and you're looking at it, you go, okay, now we're selling these things for $70,000, $80,000, $100,000, $150,000 for a tiny home, and we're trying to convince people that this is a good idea.
Yeah. So I'm very critical of tiny homes. And a lot of people, like you said, get upset because they're like, well, you said we want us to build more housing and you want affordable housing. And this is affordable in the sense that the price tag is low enough for people to qualify. But when you look at the price per square foot, it's a complete hack. Like, it's total ripoff. You're paying more and you're getting less. And not only are you paying more in terms of like price per square foot, you're taking out a 7.25 mortgage rate to buy this. So you're going to pay a lot of interest
right? Yeah.
on this house. And they're poorly designed. They're on tiny lots. There's no aesthetic, redemption in these little communities. And so I don't buy the whole, well, grandpa bought a 900 square foot house in the suburbs of New York back in the day, and why can't people today just accept the fact that we're going to build smaller homes? And if it's good enough for your grandpa, why isn't it good enough for you?
200 square foot though, right?
Yeah. So first of all, Grandpa's home was a little bit larger. Second of all, Grandpa's home was built like by hand by quality carpenters who were building for design, aesthetic, and longevity. And Grandpa's home was on like a quarter-acre lot in a nice, pleasant suburb that was close to a large metro area. And Grandpa's home was a reasonable um, amount of like ratio to his income. So Grandpa's home was truly affordable. My concern with these homes is they are not even that affordable, and they're not good. So we're offering people like a lower standard of living than what they grew up with or what their parents had or what their grandparents had. And we're trying to make it like this positive thing because this is how we're building homes quickly and this is we're getting more housing units out into the world. But if we're going to just build junk just to say, oh, look, we created housing. I mean, this is almost like the Soviet Union. Like, why are we building like prison barracks and telling people this is your new home? And by the way, Todd, I don't know if you saw the Atlantic article, people now spend 18 hours a day in their home on average. Home is really where life is happening now. So if anything, we should be doing everything we can as a society to build bigger, better, higher quality, aesthetically pleasing, nice neighborhood homes for people because they're now also, in a lot of cases, your office. We should be doing the opposite of what we are doing. But instead, we're honestly treating people like cattle, trying to build them cheap little chicken coops close together one by one and telling them this is great for them, this is an affordable opportunity, and just be happy and accept it.
My concern is that this is going to be the alternative that is suggested by these builders that are making way more money. Why would you build a home where, you're lucky to make, a very small profit with carrying costs in a time like now? Why wouldn't you just flip your operation to tiny home communities? The government just push them through, allow higher density, and give the builders the opportunity to build these at very high profits. And this be the new way that we look as the American dream of homeownership. It's scary.
It is. I've actually driven by a couple of these communities that you're talking about. There's one that's about like 3 miles from my house. It's very interesting on the websites. They tend to show the community areas and not the actual places where you're going to live. And this also happens in multifamily a lot when communities are pitched as high end or luxury. The luxury elements tend to be those shared community features. And those are the things that they talk about and show you and do tours of. That's not where you spend your time. Like I said, 18 hours a day are going to be in your little component that's on that property. And how many people are going to actually use, the fancy pool or the community garden or whatever the features are that they're selling in the community? Those are not justification to jack up the prices of the housing units, but they use them as those. And I feel like these are sort of just like the modern compromise of multifamily living. Instead of an apartment where everybody has shared walls, you have what is basically an apartment community, because a lot of these are actually built to rent. And so what they basically are is an alternative for people who don't want to live in an apartment because they don't want to have shared walls. But the ultimate feel of the community is a transient rental. You're not going to see pride in ownership. You're not going to see people taking care of these properties beyond what's required of them and really investing into that neighborhood or community. Because like you said, it's going to be temporary, people living here for whatever time being. And I think that we deserve better than that as Americans. We deserve to have a chance to have the neighborhoods and the communities that our parents had, where there's architectural appeal and reasonable sized lots and landscaping and, just opportunities for people to own their own piece of America and make it their own and decorate it. You're going to see a lot of homogeny in these communities. Everything looks the same. It's kind of Stepfordish. Like you've got yeah, you can choose between 3 colors of exterior. The shape of every single house looks identical. There's something really dystopian about that and generic. And we as individual Americans are not generic people. We have individuality as sort of one of the tenets of what makes America so great is you could go pursue your life, liberty, and happiness however you define it as an individual. And we're telling these people to go live in these boring, homogenous, identical housing units. And this is where you're going to spend, 80% of your time. This is going to be your dwelling place in America. Like, we can do better. We can do better.
Yeah, you have homeowners associations that won't allow you to change it too. I mean, that's the problem, right? You can't, architectural committee, you have to get approval. You get, punished if you left your trash can out 4 hours beyond the pickup time, after the trash man empty your trash. I mean, it's becoming completely bizarre. And so let's we're in 2025. I've been predicting that we would see a housing market downturn since 22. There have obviously been a lot of things that have slowed that down. We have seen a huge adjustment. Now time on market is exploding, days on market. Price reductions are happening nationwide. People are getting home inspections again where they weren't allowed to do that. They would never get the home. There's been lawsuits in the real estate industry. Now, hopefully, most of America knows that commissions are negotiable and, that there are no fixed prices and never have been on real estate related services. So the question that I have for you is, what do you say as somebody that's studying the housing market? You have no skin in the game other than you're not trying to push somebody to buy a house so you get a commission check. You're not trying to convince a seller to hold on or to panic sell because they may make less money. So you're very objective in your analysis and your approach. But what do you said 25 is going to be a challenging year in a lot of ways. We've talked about debt being high, oversaturation of houses currently on the market. What do you tell buyers and sellers right now headed into a spring market? Should they wait? Should they buy? What do you tell them to do?
This is probably one of the hardest markets for me to advise on because, circling back to what I said about Trump, is he's got this incredible ability to pump markets. And right now on the outset, when we came into 25, I would say the entire housing sector is malpositioned for over 7% mortgage rates. Like they are caught off sides. Home prices are going to have to come down now because this market is not prepared for those mortgage rates to hang on for longer. The only thing that I can see interrupting that is what's happening so far with Trump, with the wealth effect in stocks and crypto and everything else getting pumped up. We are going to see possibly then people increasingly buying homes with wealth, which happened a lot in 24 as well. But as long as those elements continue to go up and perhaps go up to new extremes, we could see a housing market that again hangs on a lot longer than people were expecting it to be able to. But I will say, if we sort of run into that chaotic element and something comes to a head with the stock market or the crypto market or both, which probably would be in tandem, housing has no chance. No chance. And it would start to collapse under that scenario, regardless of whether or not we started doing emergency rate cuts then, like what happened in 07. Like we would be cutting rates. If the stock market started crashing and there was some kind of crypto blow up, we would go back to cutting rates. But it would not save this current housing market. in a quick manner. So like I said, I do feel like we are getting closer and closer to that point, that tipping point where we could see that like crisis point in the housing market. And then you're going to really see that impact regions like Texas and Florida where prices are already coming down. But if that does not happen, then I think we're going to see a slow selling season out of the gate because the mortgage rates are just too high. Applications are still relatively low. I know there was a pop in last week's news, but that was all. It's basically a seasonal. Nobody bought for 3 weeks because of the holidays, and then they all applied at once. I think it's going to be a slow grind through spring, and there's going to be low sales volumes, and sellers are going to have to cut prices to sell. And the only thing that I can see salvaging that or getting around it is if there's some other big pop in the stock market or the crypto market. And with Trump, that's possible. But also, I do feel like any of those big pops put us at pretty high risk of tipping off that serious correction. Because I do think that serious correction is coming, Todd. I know a lot of people have been talking about it for years. Like you said, there's been a lot of pushback because people are like, oh, people have been bearish for years. They're saying this is 1929 for years. Where's this great crash that everybody's talking about? There will be an asset price correction. There will. And we are getting closer to it. But until it happens, things will keep going up, and it will look like everybody who's wrong is just wronger until it happens. And my odds of it happening this year are a lot higher than last year.
Yeah, I agree with everything you're saying. I think you're right. It's if sellers want to sell, they're going to have to be aggressive. They're going to have to cut prices. The question is how much. And with the price cuts that you've suggested, and it's not just in Florida. I mean, inventory are rising in Arizona and Vegas and here in Maryland. I mean, we're seeing houses sit on the market, price reductions in great areas that we would have never expected. It's crickets. It really is. Then you get the ones that pop off. It's funny. I had an agent that commented on Instagram. Every now and then, I don't let ignorance get to me to a point to where I feel like I have to reply to it. And a lot of times I don't. Stupid is as stupid does. If you want to say something stupid, I don't need to respond to that. But something that really got under my craw is, somebody responded to a video that I just published out on Florida. And they said that, we were basically clowns predicting this, crash that's never going to happen. And when I looked this agent up, because his name was actually findable and I saw that he was an agent, he sold not very much, $5 million in real estate in 5 years or something, like $1.2 million in real estate in, I think, 5 transactions last year. And when I looked up in his Facebook and I saw that he had actually had a open house that he had published on his Facebook page, that actually in the house went on the market in October. It's still on the market with a $35,000 total price reduction. I thought this guy's got a lot of excuse me for saying, this guy's got a lot of audacity to comment on my channel on how my correction is wrong, and he can't even sell his client's house and he's dropping prices. So what aggravates me the most, and we've talked about this, I know you're a little bit more kind to real estate agents. I'm a broker, for crying out loud, and manage agents. But what really frustrates me in this market more than anything, Amy, is the fact that people like this agent are continually propping up this narrative that home prices aren't coming down when they clearly are. And I think that the biggest thing here, in my advice to buyers and sellers, is pay attention to what's really happening. Don't listen to some clown pop off about how, this only goes up, because you're exactly right. corrections are coming, asset corrections are coming. It's cyclical. People look back at the history of the beginning of the United States of America. What goes up comes down. It's cyclical. And, it depends on where you're buying and transacting in that cycle that is going to affect whether it's a good thing or a bad thing.
It's got to be frustrating because if you look at what's happened in the rest of the economy, like everybody else sort of got a boom out of COVID and then continued to at least maintain that status quo. Agents got a massive boom in 2020, 2021, and mortgage brokers too. And then off a cliff. So they're struggling a lot in the last 2 years. Whereas like an average employee person, it was more consistent across that. So like, yeah, inflation's hurting them and they're still having a hard time. But they didn't have like the boom bust effect that the realtors went through. And I think it's just they're in denial. I think it's hard for them to accept the fact that what happened in 2021 is not the new normal.
And I completely agree with you. I don't have a problem with real estate agents. Like I said, I'm a broker. I manage agents and I deal with agents every day. What I have a problem is that part of what we're supposed to do as real estate professionals, and this is in your studies for your exam. You are required as an agent to understand what is happening in your local market and on a national level. And my point is, where my frustration begins is that we have to, as fiduciaries, we have to make a decision to represent our client's best interest over our own. And with that comes the booms and the busts of any market. So when an agent is not giving an account of what is really happening in a market and they're blanket spreading, things that aren't true, that is the problem that I have, where I think as professionals and consumers feel it. A lot of consumers have a very low regard to a real estate agent. And I know professionals that work very hard and that are great and that should be in this business.
Yeah. I think the key element there is the deception. If they really are aware of what's going on in the market and they don't want to admit it or tell their clients, or they're feeding them narratives that are just kind of, they're pulling them, now they're starting to come out of thin air. Like, I think the latest one was that all the people displaced in the California fires are going to buy, your $400,000 starter home in rural North Dallas. No. The narratives feel like a grasping at straws, and that is a disservice to a client who you're supposed to be in there working, like you said, in their fiduciary best interest. And that I do take issue with. But I genuinely think a lot of real estate agents just aren't aware of everything that's going on in the broader economy, or are sort of still caught up in this mentality that home ownership in America over the last 100 years has just been this boon of opportunity for people. And they can't fathom a world where that changes. Like, they should be able to, because look at Japan. There are decades in history where housing goes nowhere. And this could be one of those, to be honest with you, Todd. I think this could be a decade where we get 1%, 2% returns on real estate for many years. And that's not keeping up with them.
That's not going to pay their agent fees.
That's not going to make you a lot of money.
That's right.
And that's going to be negative in real terms. So you'll see nominal price increase and people will be like, home number always goes up, Case-Shiller up. But, in real terms, there are going to be so many other investments that you could have picked instead of real estate. And I fear that actually this is what's going to happen in the next decade. We may not get a giant crash nationwide. It may be only certain regions where we overbuilt, but instead we may end up with a stagnation where housing's sort of just a meh investment opportunity for a long time. And honestly, that's not a terrible thing in terms of if it had always been that way in history, it would have been very stable and steady. 2% gains every year, reliable, stable, would have been a nice housing market for people that they could count on. There wouldn't be a lot of speculation in it. That would be great if that was the norm. But now people aren't expecting that to be the norm. So you've got people levering up to the hill to buy now, thinking oh, this house is going to double in 10 years.
Reminds me of '06.
Our demographics don't look good for that at all.
I mean, look how many people before the great financial crisis bought houses and sold them in 3 months or 4 months and made another $50,000 or $60,000 in their house in 3 months. I mean, that's why people were doing it. They were buying it like gangbusters. The stock market wasn't doing well, so people pulled their money out and invested it in houses. And I think, and to your point on that, I mean, should the house be this massively traded asset that we all need because it's the roof over our head, and that's we could have a podcast on that altogether, on saying, look, should we really be trading houses? Should that be the way? Is it maybe not bad to see houses go through a decade of stagflation, at the very least, if not a crash, where everybody loses their asset, their equity. Maybe we just need a period of cooling off to allow for salaries and allow for everything else to adjust in place.
We'll find out. Poor millennials are going to pay the price. They finally buy their home, and then they have a decade of just blah returns.
And I talk to a lot of millennials. They're mad at baby boomers and Gen Xers. I mean, this is, sometimes you got to look at it and say, you can't necessarily blame them. Like you said, the wealth effect that's happened.
I joke about it. Yeah, I joke about that stuff on X, but I don't genuinely harbor deep hatred in my heart for the boomer generation. My parents are boomers, so I obviously, they're great people. And I think that every generation has its flaws. And I think one of the unfortunate legacies of the boomer generation is going to be what they did to the housing market, and how much of it was intentional, how much of it was just sort of the byproduct of policy that they didn't see happening. It's hard to know. I don't think they're these inherently evil people that were out to take everything for themselves and leave the world with nothing. But yeah, there were some pretty unfortunate effects of a lot of the policies that were voted into place when they were kind of running the ship.
100%. Well, it's always a pleasure, Amy, and we'll be talking to you soon.
Okay, sounds great.
Thanks so much for watching. If you like the video, you can let us know by smashing that thumbs up. And if you haven't already subscribed to our channel, please consider doing so now. Hit that alert bell. You'll know every time we upload content just like this. Keep those comments and questions coming. And one of the biggest compliments you can do for us all here at Sachs Realty is to share our channel and this video with your family and friends. This will help us to continue to build this amazing online community with viewers just like yourself. See you next time. Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.